$44 billion, that's how much a company valued at $25 billion added in market cap. Not in a year, not in a quarter. It happened last week, in one trading day. But what do you do with a stock that nearly tripled in a single day? Well, that's exactly what I'm going to show you today. And I'll even give you a bonus, another one that's been silently climbing, seemingly at random. We'll build the foundation, I'll give you the story, the catalyst, the roadmap, everything you need right here in this video. Here's what actually happened. Moderna and Merck ran a phase 3 trial. The last real hurdle before a drug can go to the FDA for a personalized cancer vaccine. Not a vaccine for everybody, a vaccine built from each patient's own tumor. They take a sample, read the exact mutations driving that specific cancer, and build something designed for that one patient alone. And it worked! First mRNA-based cancer therapy to ever clear phase 3. And when it's added to Keytruda, the combination became the first therapy ever to beat Keytruda alone. The actual standard of care in this setting. Now, here's the part that actually got me. They didn't tell us how well it worked. No hazard ratio, no survival curves, nothing. They said it worked, and promised the real numbers later. Later when, they didn't say that either. So the entire market had to price the biggest cancer news in years off a headline and a promise. And it did it anyway. Genuinely, when's the last time you heard anyone bring up Moderna outside of a Remember 2021 joke? Then in one session it nearly tripled, and then because the markets have the patience of a toddler in a candy aisle, it gave a chunk of that right back. 18 billion, that's what came off the table the very next day. Now, some of you are already thinking, it nearly tripled, isn't this the part where it's too late? Fair, but this is actually my favorite part of the whole story, because they were trialing for melanoma. But this isn't the whole bet, it's one trial out of 9. The same vaccine platform is being tested right now in lung cancer, bladder cancer, and kidney cancer. Melanoma just proved the concept works in real patients. And Wall Street didn't wait around to see if that reads across. JP Morgan raised their odds of success on all three from 55% to 70% of one result in a different cancer entirely. So that's the case on paper, but let's see what it actually looks like on the chart. And we kick it off in the smaller time frame. I'm looking at a larger impulse to be built here. I'm not looking at a top to be in. In fact, the structure is rather suggestive of continuation higher. What I'm seeing is this as an initial wave 1 up, this as a larger correction in wave 2, and this the large wave 3. Within this wave 3, we have two primary options. We could consider that this is a singular 1-2 setup being built here, where the wave 3 would have just stopped in this massive rally. Then we see a wave 4 correction and a wave 5 to complete a larger wave 3. To be clear, everything would be satisfied if it follows this path. There is no issue with building a larger wave 3 and having it complete after such an extended rally. It doesn't need to rally another 100% before the wave 3 can have a top in. However, in such internal structures, it isn't uncommon at all for the wave 5 to become decently extended itself, in which case we could see a pattern that would ultimately push towards maybe $240, maybe $250, somewhere in that region is actually quite realistic for me. To be clear, however, for a more precise target, I would need to see the bottom of the correction. I would need to see the wave 4 actually complete. So this is option 1, we get one additional extension and that's it, we have the larger wave 3 complete. It is technically possible to add another 1-2 here, and there is actually maybe even a bonus scenario we could track. It could be that internally within this, what I have drawn here as a wave 1, that it's in fact a double 1-2 setup internally. But my main point stands. The area of support we would track for the white wave 4 would be identical regardless of all of these scenarios, and it goes down to $105. Right now, it's consolidating at extremely high levels. This is quite positive. I'm looking for a potential triangle to be in formation where we pretty much expect sideways movement until at one point it just pops and pushes potentially quite strongly. I won't speculate too much on this, however, especially since this is within such a small time frame. We have the levels of support, and let me clear this up. Technically, it is possible for the wave 4 correction to extend into a larger A, B, C structure, likely heading towards the 38.2% retracement in that case. But for this scenario, it would first have to go past $130. As long as this low holds, we still have to be prepared for a potential triangle. And given the structure at hand, given the overall context, I wouldn't be too surprised by a sideways correction either. And this is the smaller time frame, but this is not the most reliable part, and we have extracted the most realistic value. But the larger time frame is telling an even more interesting story. We have just looked at this as an internal wave 3. We have had an initial 5V move to the upside in the case of Moderna. We have had an area of support that would have been very easily tracked on the larger time frame. We have had a correction, a 3-wave correction, into the last level of support, only briefly breaking it. And from this point of view, what we are looking for is at least another 5V move to the upside. What I've drawn here on the chart is this idea of having a wave 1, this stop is the wave 1, and developing a wave 3. In that manner, the ideal target would be $4,000 for the overall wave 3. It doesn't have to happen fast. It can take several years, possibly even decades in some cases, before it reaches those levels. But even if it isn't a wave 3, even if it doesn't follow this hyper bullish long-term path, I would still be looking for it to develop a wave C, still a 5-wave pattern, in which case the ideal target is the 100% extension of this as a wave A instead. That still sits at $950. That is where we would expect the wave C to reach. That is still more than a 6x from the current levels, about how much it has rallied from the very bottom to today's prices. So from a large time frame perspective, we are looking at a potential of maybe $800, possibly a bit less, it doesn't actually have to touch that level, while maybe risking $125 per share, considering that you actually allowed the structure to fully dismantle, to go below the beginning of this entire rally realistically, where it doesn't have to get there to clearly show that this pattern is most likely going to fail. Let's maybe say you allow it to go to $48 before you actually exit. Now, this is not financial advice, I'm not telling you to buy this, but it is still a 1-to-8 risk-reward ratio. And that's Moderna, that's the loud one, but if that's all you were watching, you only caught half the story, and honestly the half I find probably slightly more interesting. But stay with me here, because while this part sounds more boring, it's what actually makes the point whole. Think about what a personalized cancer vaccine actually requires. You can't batch manufacture it. Every single dose starts with reading one patient's tumor DNA, finding the exact mutations that matter, and then after treatment, watching that patient's blood for years to catch the cancer if it ever tries to come back. None of that happens without a sequencing and monitoring layer running underneath the whole thing. That layer doesn't care whose vaccine wins, and somebody else already made this bet before it was headline news. In July, Tempus AI agreed to buy a smaller company called Personalis for $1.5 billion. And I had to double check the date on this one because a month early bet on the exact right thing feels too clean to be real, but it is real. So, Personalis builds tests that catch microscopic traces of cancer hiding in a patient's blood after treatment. Its technology is what identifies which mutations Moderna's vaccine targets in each patient. And it's not exclusive to Moderna either. Personalis already sells this same platform to other pharma and biotech companies working on their own cancer therapies. It's essentially a picks and shovels play. They're not the only company doing this kind of testing. Natera and Gordon Health run competing platforms, but Tempus didn't buy a bet on one company's vaccine. They bought a real foothold in a space every one of these companies needs. And they're not just sitting on that, waiting to see if it pays off. Tempus just beat expectations on second quarter revenue, raised full year guidance to around $1.6 billion, and turned a profit for the first time ever. One company won the headline, the other one owns the road. So that's the paper case for Tempus. But let's look at the chart, and here we stick to the smaller time frame. This is probably the most important part anyway, as the larger time frame is more of a mess, but following this path we can lead into something quite bullish. Interestingly, we see the structure to have formed a more significant bottom right around that period when it agreed to buy Personalis. We are looking at a potential double 1-2 setup to have built in this area, and right now I'm looking for a wave 3 to take place in this structure. I would strongly prefer that we get one additional high before we have a top within this as a large wave 3. This internal wave 5 is not quite complete in my opinion. I would like to see internally a 1, 2, 3, 4 and a 5 before having a more significant top within this wave 3. We have the 50% retracement to look for continuation higher against, but honestly, even if it weren't the 50% retracement the wave 4 formed a bottom at, I wouldn't accept a reset in a larger ABC structure, which is why, as you may have noticed, I added an additional line of support for this stock right around $60. I'm looking at the 50% retracement in the scenario where this structure would have already been a wave 3 complete. It's not ideal for me, but I can accept that. I can accept that the larger wave 3 in yellow would have already formed a top here instead, and we would now be looking for a correction in a wave 4 to match the proportions of this correction in a wave 2. But then it's rather simple, even if other scenarios would technically be possible. Against the current low in the yellow wave 4, I am looking for extensions higher within this larger yellow wave 3. If it fails, I'm looking for the wave 3 to have already topped earlier, and I'm tracking the larger wave 4 correction, after which I'm still looking for continuation higher against $60. One key thing to notice here, a sustained break below the 50% retracement in white is a grave sign of danger, and while technically I could track this as another wave 1 up, and I would have basically a triple 1-2 setup, I wouldn't find that to be a particularly reliable pattern. I would find an overall high risk of failure in the case of this stock, in the case of this pattern, quite possibly leading to much lower prices, and that is why, especially below the white level of support, the edge shrinks significantly. Alright, we've had both charts in front of us, but before you get too excited about either one of them, and I know some of you already are, let's talk about what's not settled yet. And that happens to be on both sides. Moderna still hasn't released a hazard ratio or survival data, which honestly still bugs me. And because every dose has to be manufactured individually, margins on this are actually expected to land lower than a normal mass-produced cancer drug. Estimates put the full course somewhere around $300,000 per patient, and even at that price, the economics are still tighter than they look. On the Tempus side, the deal isn't closed yet. It's expected late this year or early next year. And that date matters more than it sounds because Tempus is paying in stock, not cash. The shares get issued at close, so every share it hands over makes the existing ones worth a little less. And the weaker Tempus trades between now and then, the more shares it takes to get there. There's also a shareholder rights firm arguing Personalis holders got shortchanged on price, though management has said they can see a scenario where this falls apart. So neither one is a short thing, one's waiting on data, the other one's waiting on a signature, and you know roughly when the signature lands. So let's do a quick recap. We got the company that ran nearly 180% in a single session. The toll booth being the other company, you have the setup, you have the risk. Neither story is over and there is no certainty in where it will take us, but you have the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.